All right, let me see. Okay. Hey, good morning, good evening, friends. Uh, Today I'm going to cover the Elliott Wave analysis of SBI card and payment services. So, but prior to that, please like and share my video and subscribe it so that you can, you know, get the immediate bell icon, you know, with the latest analysis of what's going on in, you know, the stock market for any of the stocks which I'm going to do the analysis. All right. So if you see over here, I'm not sure if you're able to see my screen clearly, but let me just remove this one. We don't need this. But anyway, if you're interested, I'll tell you what exactly is that and how I come up with this analysis. So if you see the SBI card payments, it started its 5-year journey from January 27. So again, just let me tell you, this is a daily chart. So if you see over here, let me mark the waves for you. So this is your first wave. It's ended over here somewhere. Okay. This is your second wave. This is your third wave, and we are in the fourth wave. So again, one thing which I want to tell you, the fourth wave, it's forming a triangle. So we have just completed. Let me mark you the correction as well. So what we have completed, wave A, wave B, wave C, and we are about to complete wave D. And after that, we'll see somewhere like wave E, ending over here. That will be around like maybe 8:10, 8:12 approximately. Again, that is just a prediction. So what it may happen, wave E can also end somewhere over here, which you call as the truncation of wave E. So what does that mean? If the wave E is truncated, this means like there is a powerful potential for the fifth wave to start very early. And not only that, it will reach quite a, I mean around like 940, 45, or maybe 950 around that. But that to happen, wave E has to be truncated. But it doesn't mean like if wave E ends over here somewhere around like 8:10, 8:12, that wave E will not go beyond the end of wave 3. But the chances of like if the wave E gets truncated, the chances of wave 5 going beyond wave 3 are more, and it's like in very short duration it will uh, that impulse wave 5 will form. Now with that being said, if you see here, I have marked here like 8:15, 8:21 the correction should end. So the correction should end, man, I think so I should edit it. Correction should end for wave C. Okay, that makes it little clear, because I know it so, but the audience who are viewing my video, they may not be aware of like what exactly is I'm pointing to. Okay, so with that being said, wave 4 will end over here. Now, what is happening? So when the wave C is completed, I mean you never know, like wave C can go a little bit down as well, but there will be a point where you can make it out. Okay, wave C is done, and we are about to move to wave T. Now here there is a potential to make a small profit. I'm not saying like a very big profit, but a small profit. So if you see, let me take it over here to you. If you see yesterday, that is 7th of September, we closed at 834.65. Okay, and this was like any wave of a triangle, it goes in a zigzag, or it can be a complex correction, it can be anything, but a complex correction, or the form of a complex correction of a zigzag. So here you see like we have completed just wave A and we have completed wave B. So there is like wave C is expected, and why? There are certain reasons for that. So when we have to look at like how the movement is going to happen, mostly our help comes from the candlestick. Now wave analysis should be a primary tool, and the reason is like there is no technical analysis, at least in my last 15 years of study I have seen that, other than Elliott Wave analysis, which will give you the high probability result. So my basic tool or my the first or my the primary tool is always Elliott Waves, and I'm going to use that for any technical analysis. Now the candlestick or any other tool you're using, for example Donchian average or moving average or your say volume analysis or oscillator, stochastic oscillator, or zero line reversal, or RSI, anything that should be always your secondary or tertiary tool. I will not even call as a secondary tool. You can make it as a tertiary tool. And so again, I repeat. So first should be your Elliott wave. Uh, that should be your primary tool. Second should be your candlestick, and in tertiary it can be anything. Depends upon like which tool you find it very helpful. It can be volume analysis, it can be Donchian average, it can be anything else. Okay. So with that, let's go and move to our analysis of candlestick. Let me zoom a little bit so that you guys can understand clearly. Now, if you see here, there was a series of black candlestick. So what that means is like, whenever there is a black candlesticks, there will be open will be like, high, and the close will be at the low. So if you see here, except this white candlestick, but rest of them were like black candlestick. Here also one white candlestick came in. Now, after this VFC got completed, you see over here, there was a big white candlestick. Do you see any white candlestick as big as this in any of this downfall from wave B to wave C? No. Now, with this, what does that mean? This means an indication that wave C is completed. Now, let's go back a little bit and see if we can make it out. Okay. Now, here also, if you see, the wave A got completed over here, but then it was not confirmed whether wave A is really complete until this big white candlestick came in. So that is the importance of candlestick. Now you see that you don't see a big white candlestick any of this downfall till here and also here. Okay, so what could have been the other chances that wave B has not started? Okay, the chances could have been wave ABC. This could have been X, again one more ABC, but in that case there could not have been a big white candlestick. It could have been a small white candlestick, or you know black candlestick only. But after this big white candlestick appeared, it confirmed like wave A is completed. Similarly here, if you see, the wave C is completed, and now we are progressing towards wave D. And this is a very good use of the candlestick. Okay, coming back to our analysis now. So wave we are in the wave D, and out of that only we have completed the first part of wave D, which is wave A, and wave B are about to complete. We have finished wave B, and now we are heading towards wave C. Now ABC is the internal waves of the wave D, which is wave D is a part of the bigger triangle, which I has already showed you. After this, we are going to see wave D going to like terminate somewhere around like I believe 850, 66, 67. Maybe you can take it like 860 is the like at the safest point. So how much potential we have from starting from the closure of 834 to 860? You can easily make I just do a rough calculation. Easily make 25 rupees per stock. So depending upon your the capacity or your potential, decide on how many stocks you would like to buy. Now this is one thing. Second thing, if you go to the hourly chart, if you see over here, now we will not do the analysis of wave A. Wave A is already completed. Let's do the analysis of wave B. If you see over here, A, B, C, D, okay, and we have just going to complete wave E. Okay, let me move to the bar chart. A, B, C, D, and almost E. So we are going to complete wave E around like maybe 8:32, somewhere around that point. Or it may get truncated and we'll start like seeing, a sharp move upwards immediately. However, the overall attention to draw here is we have completed a wave B correction of a wave D. So what I mean is like these are the internal waves of wave D. So I complete A, B are about to complete B, and then we're going to see wave C, which will take to around like 860, 862, 863. So decide upon it and tell me like what are the stocks you would like me to analyze. Any stocks you're like having in your portfolio, or any stocks you think like you would like to put your money and you want me to do the analysis. Please let me know in the comment box. And do like, subscribe, and share my video and hit the bell icon. Thank you very much.